Accounting often feels complex, but at its core is simply a way to understand what has already happened in the business. In this video, we will break down the accounting basics every business owner should know clearly, practically, and without unnecessary complexity. Many business owners track numbers but still don't feel confident reading them. Reports, totals, and statements exist, but they don't always explain what's really happening in the business. The gap creates confusion, not because people aren't working hard, but because the numbers don't feel clear or connected. Accounting is simply the language behind those numbers. In this video, we will break it down into simple practical ideas, no background needed. I will guide you step by step and ask a few questions along the way. So, by the end, you can understand basic business numbers and what they are telling you. Accounting exists to help businesses understand their own activity. It records what already happened in a clear, organized way so nothing important gets lost or forgotten. It doesn't predict the future or promise outcomes, simply create a reliable record of business actions over time. When those records are viewed, patterns begin to appear. That's when better questions replace guesswork. Instead of asking, is this good or bad? Business owners start asking, what changed and why did it change? That shift from reacting to observing is where accounting becomes very truly useful. Bookkeeping and accounting are often treated as the same thing, but they play different roles. Bookkeeping is about recording daily activity, sales, expenses, and payments exactly as they happen without adding meaning or conclusions. Accounting takes those records and turns them into something useful. It organizes and summarizes the data to explain what it means. Think of bookkeeping as collecting puzzle pieces, and accounting is putting the puzzle together. Are you only recording numbers right now, or are you also reviewing and understanding them? Almost all accounting is based on one simple idea called the accounting equation. It shows what a business owns, what it owes, and the difference between the two. This explains how a business's resources are financed, either through borrowing or through owner investment. The key point is that the equation always stays balanced. When one part changes, another part must adjust. Once you understand this, accounting becomes more logical because every business activity affects more than one area. Next, we will see how everyday transactions fit into this equation. Everyday business actions like buying equipment, paying expenses, or receiving customer payments are not isolated events. Each one causes a shift in the accounting equation. Cash might go down while another asset goes up, or a payment might reduce what the business owes. When you start viewing transactions this way, accounting feels much more practical. Instead of random numbers, you begin to see clear cause and effect. This makes it easier to understand how daily decisions slowly shape what's happening inside the business. Revenue and cash are often confused, but they are not the same. Revenue reflects when work is done or value is delivered, while cash reflects when money actually moves. The timing between these two can be different, and that difference matters. This explains why a business can appear active yet still feel short on cash. It's not about things going right or wrong, it's simply about timing. Quick question. If you send an invoice today but receive the payment later, which one changes first? Not all money leaving a business serves the same role. Some expenses support daily operations, like running the office or managing work, while other costs are directly tied to creating or delivering products or services. When you separate these, the numbers start to make more sense. You can clearly see where resources are being used and which activities make the most effort and support. This clarity helps you better understand how the business operates. Profit isn't just one number, it is best understood in stages. Gross profit shows money left after direct costs. Operations profit accounts for day to day expenses, and net profit reflects a result after everything is considered. Looking at profit this way gives more insight into a single number. It helps business owners see where costs or pressures are affecting the business, not just that there is pressure somewhere. Accounting information is usually organized into financial statement structured summaries that tell different parts of the business story. The income statement shows profitability. The balance sheet gives a snapshot of financial position, and the cash flow statement tracks money moving in and out. Viewed together, these statements provide a clear picture of the business. Looking at them separately can be misleading, so understanding how they complement each other is key to interpret what's really happening. Accounting numbers don't tell you what's good or bad, they simply describe what happened. Their meaning comes from context, timing, and comparison, not from judgment. Rather than reading, rather than reacting to a single number, pay attention to trends and changes over time. Following the movement of numbers helps you understand patterns and make sense of what's really happening in the business. Many beginner mistakes come from small habits, not major errors, mixing personal and business money, ignoring small transactions, or only looking at totals can slowly distort the financial picture. The goal isn't perfection, it's awareness. Spotting these patterns early helps you keep clearer, more accurate records and makes understanding your business numbers much easier over time. Good accounting habits don't need to be complicated. What matters most is consistency, recording transactions regularly, reviewing them often, and keeping categories clear. Think of accounting as routine maintenance for your business. Small, repeated actions prevent confusion later and keep your records accurate, structured, and easy to understand. Business owners use accounting to understand and communicate what's happening in their business. It helps them see how operations are running, plan resources effectively, and share clear information with others. When numbers are clear and well organized, discussions move from guesses and assumptions to evidence based decisions. Accounting becomes a tool for better communication and smarter planning, not just record keeping. This video gives you foundational understanding of accounting. The next steps like reading basic financial statements, categorizing transactions and tracking cash build on what you already know. By learning in this structured way, accounting becomes less overwhelming. Each step connects to the last, helping you gradually gain confidence and clarity in managing and understanding your business numbers. Accounting isn't just a title or role, it's a skill that anyone can develop over time. Learning the basics gives you the clarity and helps you see business activity more clearly, making decisions easier and more informed. If one idea from this video stood out to you, leave it in the comments. Sharing your takeaway not only reinforces your own learning but also helps guide future content for everyone watching. Take action, share your thoughts, and keep learning. Your future self will thank you very much.